Hey everyone, Rob Folia with Folia Properties at Keller Williams Realty here in Nashville, and I wanted to go through and run through a potential rental property with y'all. Today's story is actually sparked by a conversation I had with a lender friend of mine recently, where he was telling me about a client of his that they were under contract, they were getting ready to close, and that client was basically getting cold feet because the reality was that he was buying a rental property that he was going to have to pay money on every single month. If you're not sure what I mean by that, go back to the last Would I Buy It video that we did a couple of weeks ago, because that right there, we walked through an example where it was a potential rental that would it make sense for somebody to buy? And the answer was no, because they were going to have to pay money every single month. So we're going to walk through. Actually, I haven't run the numbers on this one yet. I was just browsing through some potential multifamily properties that were out there. Found this one in Clarksville. Saw 4 units for 550. Knowing that in the past that might have worked, I want to see if this works. So let's just dive in. Let's look at the numbers. Let's see if there's any pictures even on here other than the front. There are some pictures. At least the units that they're showing here, or unit, it looks like maybe just be one unit that they're showing of the 4. That one looks moving ready. Let's assume they're all this way just for our conversation. Obviously, if you're buying a rental property, you want to walk through it, you want to inspect it, you want to make sure that especially if it's say a multi-unit like this one, that this isn't, if this is one unit, that the other 3 are like this as well. And yet at the same time, let's just assume for this video that they're all like this. They're asking 550. This one's under contract already, unfortunately. And so, just like before, we're not critiquing this agent, the seller, anything along those lines. We're really just looking at the subject property and seeing if the numbers work. So let's just go to our spreadsheet here. We're going to just assume that 550 is the sales price. That's the market value, and assume that they are putting 25% down, because that's basically what's required right now for a rental property, especially a multifamily. And so if that's the case, their mortgage balance is going to be $412,500. I probably should just make this as a spreadsheet or as a thing, shouldn't I? So the equity, that minus that. All right. So, and again, this is basically a spreadsheet that I've put together in the past to walk through with clients. Should they sell it? Should they rent it? But it also works for Would I Buy It? And so let's see, what's this one currently renting for. You can see they've got 4 rental amounts in here. Again, if we were actually going through and buying this property, we'd want to go through and actually comp out the 3865 that this agent's advertising. Is that what it's actually going to rent for? We'd want to make sure that we actually have the right information, that we're working with the right info. And so anyway, though, let's just roll with that as being correct. Let's assume it's moving ready and that we don't need to do anything to rent out this property. Let's see what would this mortgage actually cost. This is from a previous one, so it's not 1,700 on this one. So let's just say, and before we even look at a mortgage calculator, what we've got pulled up here is just stats from Freddie Mac's website. They update it once a week, and it hasn't updated yet today. They update it every Thursday, usually around lunchtime. As I'm recording this, about 9:30, and so it's one of those things. It might change a little bit from here for today's rates or for this week's rates, and yet 6.5% is pretty normal for an owner occupant as of right now. Maybe a hair higher than that. For investors, it's still closer to 8%. So let's plug in 8% on here for our mortgage calculator. Let's just say it's a $550,000 purchase. We're putting 25% down. Interest rate, let's say, wish it was 3%, but it's 8%. And let's see, what were the stats on here? Taxes, 4136. And we don't need to put MI on here. And then home insurance, obviously, I'm not going to have an exact number for you on this. You'd have to get a quote from your insurance rep. I'm going to work off of a duplex that I own that's in that area of pretty similar condition, that and I'm just going to double it. And I know that my duplex, it costs me about $1,400 a year, I believe. So I'm just going to double it since it's 4 units and make it $2,800 a year. So that's everything. 550, 25% down, 8% rate, property taxes, MI. You can see 3,600 is basically the mortgage payment's going to be for this one. And obviously I am working off a rough number. This is not an exact And for a multi-unit, I'm going to want to make sure that I am I just realized that is sorry, I'm editing this on the fly. I had the there we go. I had the formula incorrect on here. And so anyway, basically 3,600 for the mortgage, zero for an HOA because there is no HOA. Property managers, again, they roughly charge about 10%. So that's what we're going to budget here off of rents. And again, this maybe there's the ability to raise the rent, especially just looking at this one. You can see that I was glancing at it as we were scrolling through. Two of the units have been updated, and I'm going to assume that's probably the two that they're getting more. So maybe you can get a grand a month out of each unit. Maybe you can raise this to 4,000, 4,200, maybe even 4,400. But still taking money aside for vacancy, for repair. I mean, you can see already that this one's losing money. And and even if we were to take this out and let's just delete those two, and you just have principal and interest, you have your property management, you can see your total expenses are already about 4 grand. So even if you get these rents raised to about $1,000 a unit, which, I mean, who knows, maybe this one's at 1250, maybe you can get 1250 per unit. Obviously that starts to be a little bit of a game changer, but still, right now it's losing money. Let's just say hypothetically you can get 1250 a unit, and your 4 units, you're getting 5,000 a month. Now all of a sudden it's starting to make a little bit more sense. You're closer to the 1% rule. Obviously, you don't have vacancy and repair in here, and yet at the same time, that's roughly another $500, and that's money that you're not spending every month. You're just kind of earmarking, bookmarking, saying, hey, that's going to be going toward vacancy and repair at some point here over the next little bit. The reality is you're still looking at right here, you're looking at profit. The thing that I would be concerned about it, and I'm gonna revert this back to what was it, 3865. The thing that I would be concerned about if I were purchasing this unit, and again, this is not a shot at the unit or the agent or anything along those lines. This is just a property that's listed out there on our MLS, and so I wanted to just spotlight it because it looked like a potentially a great unit, and I think it could be a great rental property. The reality is, looking at this, is that they're selling it for the potential that it has. Because as an investor, again, to me, it starts to make sense at 5,000 a month. Hey, all right, cool. I'm getting 5,000 in income a month. Even with this hefty mortgage payment with an 8% rate, even with a property manager, I'm still pulling in a little bit of profit. Hopefully rates drop at some point in the next little bit, next couple of years. If they do, I can refi and get my payment down. Because even if, just say, you could, instead of it being an 8% rate for an investment, let's just say it was a 6, all of a sudden 3,050 with nothing else changing. So you're adding another 550 a month in profit if that's the case. And 6% isn't even two out of the it's not too dreamy. You know what I mean? I'm not saying a 3% rate or anything along those lines. And so if these units were all getting 1,250 a month, I'd be like, okay, that might make sense. Let's just say you can get an average of 1,000 a unit. You're breaking even at that point, as you can see here. You really are. It's to me, I'd be concerned about that. I wouldn't purchase that because that one right there, it's not, you're not going into it cash flowing. And there have been too many opportunities in the past to buy a property that before you even make a mortgage payment, you have rental income coming in. And that rental income is more than offsetting your mortgage payment. And so long story short, don't rush things if you're an investor in this market. Rates, at some point, things will equalize. Either rates will go down, rental values will go up, things will just start to make sense for an investor. To me, it doesn't make sense right here, especially if this is what you're getting, or was it 3685 even, so a little bit less than this. The reality is rates as they are today, it makes this a little bit of a challenge. So again, I'm just throwing this out there because I'm not trying to say anything bad about this property, the listing agent or anything like that, because obviously they got their price, or they got a price that made sense for them because they are under contract. And yet the reality is I wouldn't buy this one. And investors that are out there, it's pure speculation if you're looking at something and saying, all right, I think I can get it up to 1,250 a month. Because what happens if the economy collapses and, a 2-bed, 1.5 bath unit that was, built in 92. So this isn't a brand new home. What if you can't get 1250 a month for it? What if you're only getting 1,000 a month? Again, you're just breaking even at that point. You're hoping to ride a wave. Too many investors 15 years ago, when the economy collapsed and there was that mortgage crisis, too many investors lost their shirt because of this. And so I just want to implore y'all to please be patient. The reality is, at some point the numbers will start to make sense again, whether that be instead of getting 550, you're getting, you're buying is for 500, and all of a sudden then you have a smaller balance from your mortgage at that point, or rates drop, or rental rates just happen to rise. Things will start to make sense from an investment standpoint sooner rather than later. Don't rush. And in fact, we will start to see some properties that make sense. In fact, my goal for our next Would I Buy It video is to find one that I would buy as the numbers sit today. It might be a little bit of a challenge with where rates are, but that's okay. I want to make sure that we can spotlight and find properties that I know I would buy, and that would make sense from a rental standpoint for others as well. And so appreciate y'all checking this out today. As always, if you have any questions, comments, feedback, if you have a question about your own real estate investment portfolio, either drop a comment or shoot me an email. It's just simple. It's rob@foliaproperties.com. So ROB@FOGLIA properties.com. You can also just send me a message here on wherever you're seeing this. If this is on Facebook, YouTube, you can send me a PM or drop a comment, and happy to connect however we can. As always, y'all, I appreciate you checking out today's video, and we'll see you next time.